Hello there, everyone, and welcome to our special presentation today on how to play the current market. I'm sure this past week has many an investor out there scratching their heads wondering what is going on. We've had some pretty significant up days and some even more significant down days here as of late. And overall, the market still, even at this time, after a pretty good run up off of some mixed earnings, and potential crack in the jobs number seems a little bit of a stretch, but at the end of the day, markets have had a positive reaction here. And so what the heck, what's the way to be thinking about this market, and what's the best way to play it? When's the best time to start looking at buying stocks again? And when is the best time to get more defensive? And so really what we're doing is balancing fear and greed, right? Just as the market does. And fortunately for all of you folks, VectorVest has been in business for a long while, and we are the best when it comes to market analysis. And so we're going to prove that and show that to you here again today and talk about where we fit in the spectrum of our market analysis and thereby what you should be focusing on. Okay. So as they say, or used to anyway, just give me the facts, ma'am. Well, that's what we're going to do. And the way that we're going to do that is with the VectorVest secret weapon. And that secret weapon, ladies and gentlemen, is going to be this little phrase here: keep your eye on the MTI, because it really does tell the story. If you want to know when the best time to be greedy again is going to be, the MTI is going to lead the way. And if you need to know when you need to be a little bit more cautious, the MTI is also going to deliver on that side of the spectrum. So where do we fit, and how do things shape up right now? Well, I'm so glad you asked. Let's jump right in and take a peek. All right, so here we are at the home page for VectorVest, and we'll kick things off with some 30,000 foot view type discussion, such as we pop into the home page today in VectorVest 7. We look right up at the top with our market timing gauge, and it says here the color guard is neutral. VectorVest does not advocate buying any stocks at this time. But hey, wait a minute. I'm looking over here and all the market indices are up a reasonably good percentage today. Well, if we look to why the needle is pointed 3 ticks into the yellow, it's because the market averages have actually come off on a week over week basis, and still by a noticeable amount. And when we look at the short-term trend of the market averages, it's also softened up and even fallen below 1 even after today's move. If we look at the buy to sell ratio, I saw some guys on CNBC this morning discussing whether this market rally is broadening out. And we look at the buy to sell ratio here, which tells us how many buys are in the database compared to sells. And I think it's fair to say the market is not currently broadening out. We had more than 2 buys to every sell just a week ago. Right now, that number currently stands at 1.35. So in reality, while there's some good strength day over day here, there are still far fewer stocks participating. And when we look at the MTI score, which is the composite reading of those yellow lights that we just went through, the composite reading of all 3 of these indicators, it's cast on a 0 to 2 scale, as we've discussed many, many times. Above 1 is indicative that the underlying trend of the market is up. So we can clearly see that the underlying trend of the market is up at this time and fairly strong. However, as we look back to just the week over week movement here, it has weakened significantly over this past week. And I know Angie has been writing that up a good bit in the VectorVest views. Glenn Tompkins came on last week, talked about protecting profits, and boy, what a timely special presentation that was. And largely, folks, this is driven on our ability to read and use and implement these indicators that have stood the test of time. And so what we're going to do is talk a good bit. We're going to keep things really simple today. I could break down and look individually at all the individual parts with the price, the RT, and the BSR. But what we're going to do is just focus right in on that MTI, because that's the single most important indicator we track on market analysis. And it combines all of that other useful information into one single comprehensive indicator on timing the market. And there's a little story still brewing here if we look closely. And again, that's that the market averages are up quite nicely today, but the MTI has actually continued to move lower on that scaling, indicating even after today, the overall underlying trend is continuing to weaken. Let's explore that. Let's take a little closer and deeper look at what we mean. So what I'm going to do is come right up here to the top and go to the timing tab, and from there the market timing graph. All right. And when we get here, for the moment, we're just going to stay isolated on about a 2-year graph or so. Should really kind of hit the high points and tell the story. So this is your default graph, and each and every single one of these indicators is extremely important. What I want you to again realize is the MTI is the master indicator in here, as it's wrapping all of that information, all 3 other indicators into one. Okay, and so what I'm going to do is just really focus in on this, because it's going to tell you, and it'll be clearly illustrated here, on when's the time to be really greedy on the propensity for higher stock prices in the future, and when it's time to be a lot more cautious. And then I'll let you make the determination after we have this quick discussion, and I'll help you along, of course, on where we stand now. Okay, and so what we see here with this bottom indicator, let me just go ahead and put this on a date line, is that when it gets high on the scaling, that number tends to fall in line roughly between 1.5 into the 1.7 range when we get up into that territory. So I'll draw a line across the top here. You want to start getting a little nervy, certainly, when you make it up into this territory on your stock portfolios. Because what we're going to see in terms of the common denominator, which is going to be the movement of the VectorVest composite after these levels are achieved, is really the thing to focus on. So when we get up here to the first peak, what was the resulting market action overall over this next several weeks to months? Lower, right? Now this indicator has another level that we like to pay a lot of attention to. And I'm going to draw that one out for you down here at 0.6. Okay. So when the markets have fallen enough and we start to get down into that territory, it's like a rubber band. Okay. Forget whether the market is in a bull or bear market scenario even. Just understand the concept of a rubber band. When you stretch it, the further you stretch it, the more resistant to going that direction it becomes, right? And at some point, what happens? Well, the rubber band either breaks or it snaps back, right? And so we're going to be talking about the reversion, regression, if you will, a better word, I think. And so what happens next when these lower levels are achieved with the MTI is markets tend to bounce. How much and how far is even often dictated by how low on the scaling you achieve. Okay, so again, under that rubber band analogy. So the higher you go, often the more substance there is on the immediate reaction in the stock market down. The lower you go, the more substance and the more highly reactive the markets are, and stronger the push, the lower the score. Okay, but you'll see this repeat over and over and over again. How did the markets react here? Overall, we pushed lower. How did the markets react when we got low on the scale? Tried to push higher, right? Sometimes we don't make it all the way to the top, and sometimes we don't make it all the way to the bottom with this indicator. But if you want to know the times to be the most careful, that's when you get there, when you get to the highs. And if you want to know the times to be the most greedy, it's when you get to the lows. And if you focus solely on that, it'll change your life. It absolutely will. Would this have been a good time to be thinking about buying stocks? What about even this one for just the next several weeks? Right? What about even this one? How about this one here? Was there resulting market action on each of these occurrences that could have led to really nice profit potential in the stock market? You better believe it. And what is also true, when this indicator gets up into the levels that we've seen achieved here even recently, based on what you see on this chart, do you think it's wise to be extraordinarily bullish on this stock market at this time? Now, one important thing has also happened. It's dipped off. It's dipped off, and that's alleviated some of the stretch, right? But when it dips off this much, also in almost every occurrence that you're going to see, and you can go back as far as you want to go. Some folks might say, well, the MTI can stay up here for a while. Well, while that's true, right, you'll also find that when there's enough substance to the curl there, it often leads to further fall in the stock market. And so, you can, what happened when we got up here? Whoop. What happened when we got up here? Whoop. What happened when we got up here? So there's, nothing is 100%, right? This is a likelihood game that we play. But with every peak, there's usually some fall. And when the MTI begins to roll with more substance, there's usually more and more fall to come. And so when we come back up here to the current, that's the picture that we want to paint. Now, where does that leave us? Because the market seems to be very resilient here still. And so there might come a time where the MTI doesn't make it all the way below 1 or to 0.6. So when, under the current conditions, could I still continue to think about participating in upside market action, even if I want to know now that I should do so far more cautiously? Because the time to attack the market with all your buying power you can stomach is when the MTI is low and the market starts to move up, right? So we're not in that situation right now. This shouldn't be a situation where you're thinking, well, I'm going to take all my money in my nest egg and attack this stock market higher. Now, there may come a time where that becomes more acceptable again, and that'll be off of a reset, right? But should upside remain, we don't want to remain so cautious here that we miss out on something. So when can I think about jumping back into this market, right? Well, the best recipe, and has long been the case at VectorVest, we've written many an essay on the subject. So you can search the views for something called the green light buyer, okay? And that'll be the next time a green light is signaled in the price column of the color guard. And so what we'll do is we'll come back over here and we'll say, all right, we've seen some green lights here. When's the next green light likely to appear? And then how much faith should I place in any new green light that shows itself here? So we're going to address that in a very big way, because all green lights should not be treated with impunity. I think we've heard some rhetoric this week about folks saying, well, we just had a green light and the market went down. There's always a first green light and a last green light on every market wave. Every market up wave will always have a first one and a last one. So if we receive a green light next week, is that going to be the first one? Or could it be more potentially the last one? And so that's the way that you need to think about any further green lights that we see here. Yes, it's enough to warrant action. But, and so let's drive that point home. First, quickly, there's the potential for a green light today. The market would have to get above 60, 64. So it's got a long ways to go still. It would have to more than double the current action, I believe, to get there. The next day, on Monday, for example, as you wake up and start looking for opportunity, you'll be working off an even higher price a week ago on the VectorVest composite, right? And so it's going to have to travel roughly 81 cents from where we are now, between now and the close of business Monday, to look and see if we want to buy stocks on Tuesday, because we don't buy the stocks on the signal itself in isolation. We like to look for follow through or a higher movement to better even confirm that green light the following morning. And usually you want to wait about certainly 15, more like 30 minutes, and get through the 10 o'clock hour at the very least, and make sure the markets are continuing to drive your direction. Okay, so we could see some green lights here even over the next 2 days if this thing really catches fire, right? And even Tuesday, looking into Wednesday. But then we start to run into a situation where you're not going to be able to have green lights anymore because you'll be working off reds. Okay, so that's information in and of itself. The market right now is not on very firm footing in terms of consistency of signal in VectorVest. So I'm trying to make this simple. Let's get right into the chart again, get right into the market timing graph and really lay it out. So I'm going to go right up here, go to the market timing graph. One thing that I can see is that the market is trying to hold on to support here even, yeah? And so that's noteworthy and indicates, hey, we might head higher over the next couple of days. All right. As we start looking back, these closes, in order to achieve those green lights, are going to have to get above 5 days ago's closes, right? As long as we're working off of a yellow or a green a week ago, right? So if we go back 1, 2, 3, 4, 5, we got to get above this close today, at the close of business today, to be looking to potentially buy stocks on Monday. So that seems a bit unattainable, given where we are, even after just the first hour or so in the stock market. On Monday, by the close of business that day, we have to get all the way above here. And when you think about that, by waiting here, the market is what right now? The market is sideways, okay? So markets are not making new highs anymore. And until they do, the markets are not officially going up anymore. And so by waiting on the primary wave here to catch up and then an issuance of a green light, we're trying to get free and clear of some of this consolidation and enough momentum at our back to feel better about instituting those new purchases. We said earlier that all green lights are not created equal. So if we take a look at the green light buyer, for example, and I'll actually throw on the kicker here, as I think you ought to consider. The GLB RT kicker is wonderful at passing along some information quickly to you that I want you to see. So when we talk about all green lights are not created equal, and we wrap that into the prior discussion that we've had with the MTI, once the MTI begins to work its way below 1, it was built to precede the confirmed down call. Now, on some occasions, they come in rather simultaneously. And sometimes the confirmed call can even come prior, okay? But what happens here is that means the market is no longer healthy. You're likely to see substantial decline. And so after a confirmed down signal is received, which is the last line in the sand VectorVest provides, in terms of, hey, the market is confirmed to be falling now. And you can see markets tend to dip off quite heavily after the vast preponderance of these are achieved. Then we need to be on the lookout for that first green light. And so, my friends, if you look at the first green light after this confirmed down, was that going to be a good opportunity to be really leveraging potential upside action in the stock market, you better believe it. After this confirmed down, was this a good time to be thinking about really leveraging the upside action on the stock market for the next several weeks to months? You bet. After this confirmed down, was this a really good time without taking on so much risk that we might get some whipsawing, to think about leveraging the stock market again? Well, you'd have been a little uncertain at first, but guys, this is what the likelihood puts on your side, is that, again, the rubber band is too far stretched here. We're coming up off of oversold conditions, and so markets are likely to keep moving higher. As you go higher up the ladder, eventually you'll hit even a final confirmed green light. Okay, and so let's take things cautiously here. Nothing says we have to use all of our buying power out in the open market at any given time, or if we are, let's at least know how to take defensive actions that Glenn Tompkins laid out for us last week to make our risk more secure. Okay, so we can do that by buying some contra ETFs as a hedge. We can do that by buying puts. We can better even do that by doing collars, selling a higher price call to offset the purchase of those very expensive puts. And there's any number. We can tighten stops. We can stop replacing positions. We can let our real winners continue to run. Right? But what we don't want to do right now is throw caution to the wind, because if history is a judge, it's not the time to do it. And there will be a next best time, and it is worth the wait. How many times have we had beautiful buying opportunities here in just, the last couple years? 1, 2, 3, 4, 5. And how many times have there been to be more on the cautious side of things? 1, 2, 3, 4, 5. Right? So the bottom line is, come into your VectorVest platform every day. Right? Go to the home page. Do we have a green light in the price column? No. For all but the most very aggressive, right? That means let's sit and wait until we have a green light. And that's at the close. And when we do, we can look to buy stocks the following day. Is it the first green light since the confirmed down? No. Should we attack the market as vigorously now as we would have with the first one? No. Okay. Will there be a time to attack the market vigorously again? Yes. Is it going to take a lifetime to get there? No. Okay. And so understanding that cycle on the MTI, again, I believe is life-changing because it tells the story. Now is the time to be more cautious than not. Now is the time to be more selective in letting our winners run and cutting our losers early. Now is the time to be taking defensive actions when we're in situations where the primary wave is down, right? Tightening stops, doing everything we can to preserve capital. If we see a green light emerge again, we loosen those stops. We reduce mitigation steps we've taken on downside risk. We loosen things back out, and we get super selective here with what we look to buy. And where do we look to buy those? We go right to the Viewers tab, right to Stock Viewer, and there'll be some beautiful candidates right here at the top of the list. And oh, by the way, I've done several presentations here in VectorVest University over this course of this year. Put together a lot of information at our seminars and events. And the highlight of the show is right at the top of the list with SMCI. You're going to be hard pressed to find a better stock in the entire market than that one. And there are many others to go with it. This Extreme Networks is a phenomenal looking little stock that nobody knows about, just like Super Microcomputer, and people in the Jockey Club have been very thankful that we brought that one to their attention, right? And so on and so forth down the list. These are all great stocks to be thinking about. All right, so I hope you enjoyed this presentation, and I truly hope that the contents of this presentation can change your life just the way they've changed mine. There's a time to be greedy, and there's a time to be more cautious. And now, my friends, is still the time to be more cautious. We'll see you next time right here at VectorVest University. See you then.